Hello and welcome. It is the third day of April 2017. My name is Derek and welcome. Let's take a look at another cryptocurrency chart. This one, Ethereum, on the daily time frame. This time is inaccurate. It is about 2 hours after this point, about 1444 for this price, as if that really means anything anyway. So let's go over the analysis of such. And sometimes when I look at Fibonacci, it comes so easy. I find the key high, I find the key low, I do my math calculation. It's easy. For example, Dash yesterday, simple, and it worked. But this one, not so easy. But I think I got a good hang of this one. For I need to find a key high and a key low, and the key high is a no-brainer. It's the high made a few days ago in at around 64.92. And these numbers, well, there's two zeros before the decimal, and then you get these numbers. For easy readability, I have it written in this form. Therefore, let's continue on further. What's the key low? What I'm looking for are usually either A, the bottom. Those that are the key level, and this is the case here. What else I'm looking for to give it more strength, more validity, is something like this, where it is twice hit low. So this would constitute as a good spot to pick the low, and it's in at 731. However, I'm also looking for a situation like this. The very, 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 very long sideways consolidation. Support level to be very strong. Boom, boom, and boom. So that constructs itself. Both levels are exactly what I'm looking for, but I can only take one. I mean, I'm going to look at both to see. However, right off the bat, this level here and the first 23.6% down move hit it yesterday, pierced below, which they usually do, a little pierce extra, seems to be the case. Sometimes large pierce, as was Dash yesterday. And it moves back up to the 18 average, and it resisted former support of its previous 2 days. Today's movement, breaking down below the band, test number 2 of the level, 23.6 down move. Now it's written on 76.4 because it's a 76.4% up correction. Of course, you subtract that number by 1, a 23.6% down correction. So it does look as if it's holding a little weak. I don't like this number as strong as I like the key 61.8 and 38.2% marks. Within the 18 average band, let's look at it the last time after this long sideways movement. Establish resistance, come back to the band, then break resistance. Now, I would have rather this be a little higher, but it still worked within this case, as I would wish this to be a little lower in that of establishing support. Band is flat. Now it's in that area. I'd rather it have a move somewhere in here. Somewhere around the 50% of this line down towards this line. But down here is too much. But the market's going to do what it's going to do. It just usually, it's not going to bounce much more than, say, this, going down that is, before going back up first. So I'm looking for support to be established, this band slowly start to decline, and then whatever support is to be broken, to expect at least another leg lower, and potentially that of a longer bear market. But with that being said, I like the mathematical odds that any bounce towards this point is going to be some key support. And another reason why I like to use this mark here, because if this is the low, then what would happen is this number would be a little higher, this line that is, this line would be a little higher, and usually they pierce below as it is anyway. So why don't I just choose the lower number to give myself better mathematical advantage. And generally on a chart like this, if I don't think it's going to be bullish or I don't know, then I would buy at this point and try to liquidate out all of it by this point. If I do think it's going to be bearish, well then it's a great accumulation period to get into such. And if you don't find support or resistance in key areas where you're supposed to, and we're supposed to find support in here, then you're usually going to have a fast move to the next level. Enter a little under 17, about 16. This level of previous resistance. And an example of such is, let's just assume there was good Fibonacci upsides in here, and there were in different spots, and it just kept going higher because resistance, which was supposed to be found somewhere in here in different places, was not, and it just kept going higher. Normal market movement. But on the situation of a move here, I do like the odds of a higher probability for up move more times than not. Take care and have yourself a great day.